Tajudeen Ibrahim, who is the Director of Research and Strategy at Chapel Hill Denham, has been patiently waiting for this. Hello, Mr. Ibrahim, and thank you for joining me on the show today.
Hello, Nancy. Thank you too for having me on today.
Welcome. A happy new year, I guess, should be in order. Have we spoken? We haven't spoken this year, so a happy new year to you.
Absolutely. Happy New Year is in order. We have not spoken this year. This is the first time on your show this year.
Yeah, so welcome to the program. Now, if we take a look at inflation, which we will be digging deeper within the course of the next 30 minutes or so. Inflation, according to the Nigerian National Bureau of Statistics, 21.34%, easing. Are you surprised that the festive spending did not reflect on this figure? Because majority of analysts, I don't know if you're a part of them, did anticipate and forecast a higher inflation rate in December 2022. So were you all disappointed?
Well, I think for us at Chapel Hill Denham, we also see the latest inflation number that was released as a positive surprise. Because before the release of the number, our outlook was for a 21.4% inflation number for the month of December. And naturally, the market, and let me say the broad economy, would have expected that the festive season would have partly impacted inflation to lift it to a much higher level. But I think there were major surprises coming from core inflation and also coming from food inflation. So those, to my mind, are positive in terms of how inflation eventually came out. But I think it is too early for us to assume that inflation has peaked in the country as we speak.
Okay, I am really curious why we did not see so much of the festive spendings impact inflation. Would you attribute that to perhaps some of the regular expenses that Nigerians make towards Christmas and the New Year? A lot of Nigerians travel home, perhaps to see their extended families. Do you think that those travel expenses were suspended in December of 2022? And do you also think that perhaps a cap on household spendings for households in Nigeria really going for their needs and not for wants anymore impacted on the 21.34% December figure?
I think a couple of factors are on the table, and it will be useful if we understand each and every one of them. The first thing to notice and bear in mind is that we had higher inflation on a standalone basis if we are looking at December. December month-on-month inflation came in at 1.71%, which is higher than the November standalone inflation of 1.39%. That is an indication of relatively higher prices in the month of December relative to the month of November. The only thing that happened is that the 1.71% came in much lower than we had anticipated at Chapel Hill Denham, for instance. If we capture what we were expecting, we were looking for month-on-month inflation to be around like 1.8% upward, but it came in at 1.71%, and it is still higher than what we saw in the month of November. So if we look at consumers' pockets and we consider several factors such as securities in the country, and also the availability of goods and services just in time for consumers to take advantage of them and buy into them, we will agree that consumers could have spent more in the month of December, but the income levels were just sort of at the same level, not changing, despite rising prices of goods and services. The second element to my mind is that security was another issue that naturally sort of discouraged many Nigerians to travel as normally they would have done during the festive period. And such travels, would have, driven some increase in spending by consumers, but we didn't see that happening much in the month of December. So I think the third element to my mind, I think, is around possibly food harvest. That could have sort of positively impacted the inflation number that we saw in December. So broadly speaking, we have higher standalone December inflation number, but when you look at it on a year-on-year basis, it's sort of slowed down. And those are the factors that seem to explain why the number slowed down when you look at it on a year-to-date basis.
Okay, Tajudeen, I will come back to some other factors that led to the figure that we're seeing, or perhaps have led to 2022 inflation and numbers. I really want to ask you this question, which is, could the year-on-year inflation rates be attributed to the base effect as suggested by the month-on-month performance? I don't know if I was a bit clear on what you said earlier. If you're suggesting what I have just asked, if the year-on-year inflation rate was impacted because of the base effect of the month-on-month performance.
Okay, so if we take a look at it from a base effect standpoint, we recognize that in December of 2021, inflation for the month of December standalone was 1.82% in 2021. For the month of December standalone in 2022, inflation was 1.71%. That sort of supports your point that there is an element of high base effect in the month of December 2021, and that also seems to be partly responsible for the slight moderation that we saw in year-on-year inflation to 21.34%. You are spot on in terms of the base effect also having some bit of impact.
Okay, now let's dig deeper perhaps into some of the factors that we saw impacted inflation in the year 2022. You've talked about insecurity, you brushed a bit about food, but I really want us to look at energy costs. Energy, both power and perhaps fuel. Do you think that it really filtered practically into every other item, into every other consumable by Nigerians in our lives? You will see, for instance, fuel, petrol price selling at 250 naira, 300 naira in some places, in many places in Nigeria. So do you think that Nigerians are already, that cost is already filtering into every other item that we consume? And we saw a bit of that high inflation in the 20% band when the fuel crisis, of course, we're still having fuel queues around October, November, December. Tajudeen, I hope you're understanding where my head is with this question.
I get what your questions and also comments are, and I think one way to also consider some of these factors is to try to run through the year 2022 from an event standpoint. In the first quarter of the year, that was when we had global energy prices rising substantially, partly because we had that issue or the war between Russia and Ukraine. And in the second quarter, the impact of that development became more intense in the sense that it now began to impact food prices, because we have some food items, or let me say some raw materials that are used to produce good food in this country, imported from the region where Russia and Ukraine are located. So you will see the impact also being attributable to that in terms of food and commodity prices. And energy prices locally here became a big problem when diesel prices, somewhat, over more than doubled,
Yeah.
on a year-to-year, basis. We also now had the impact of, insufficient supply of, petroleum, premium motor spirit, which we naturally call, petrol. So we also had that, hitting us as a country in 2022. One key element also that we must not leave untouched is foreign currency. At the BDC segment of the market, or let me say at the parallel market, we had, significant devaluation of the Nigerian naira. So all these factors were largely speaking responsible for the, high inflation rates that we saw in the first 3 quarters. And towards the end of the year, the last quarter of the year, we had the flood event. So that flood, was a negative factor for food harvest. As we speak, we have some food items, that have seen their prices doubling over the past, 12 months. We have seen some of them where prices have increased by 50%, some by 20%, and so on. So if you take an average, what's this inflation number? For instance, the food inflation is telling us is that we had average of 23% increase in food prices in this country in the month of, December 2020. So we had all these factors that were largely speaking responsible, and there will be need to address them, not just by monetary policy actions alone, but by fiscal authority, responses to such developments, in my view.
Thank you, Tajudeen. I like that you were able to dimension at least those factors. So you really understood where I was coming from in terms of Russia, Ukraine, the impact on the prices of cereals, durum wheat, and what have you. And I also like the components which you brought in, the aspect of diesel. At least diesel was selling, I think, around 250, 300. Now it's selling at about 800 naira, and that is also filtering into the daily consumables of Nigerians. Now, let's quickly talk about the 2023 general elections. We're done and dusted for 2022. I don't know why you're smiling. I know you're not a politician. Don't worry, I won't be asking you political questions, but asking you questions regarding how these politicians, their handling of the economy and the impact on us. Do you think that there is a possibility that high-related election spending may push inflation higher in the next 2 to 3 months? That is, if these politicians have even started spending money the way we expect.
Yes, I think so. I think, inflation spending has the potential to drive inflation, further higher, particularly when we take a look at, core inflation, that is, the segment of the, inflation, component that, election spending can drive higher if it is not put under control. And it is on the back of this expectation that I think, or let me say at Hill Denham, we believe that, the Monetary Policy Committee will remain, hawkish in terms of, their monetary policy stance. And, there are chances that they consider, raising interest rates further in the month of January, talking about their meetings that they will be holding next week, 23rd and 24th. I sense that, there'll be that fear that, election spending, number one, the fear that, insecurity has not really, security has not really improved in the country. The third element, I think, is that we bear in mind that, power tariffs most likely are still going to go, higher. And the fourth element to my mind, I think, is around, the removal of petrol subsidy. For all these, 4 factors, my sense is that inflation, may still go higher, and it will not be advisable for the authorities to allow election spending, spendings that are related to elections to drive inflation higher to further support the other 3 factors, in my view.
All right, Tajudeen, I'll come back to you. Let's quickly take a few seconds break. When we return, we'll continue our discussion. All right, welcome back. Tajudeen Ibrahim is still with me. He's the Director of Research and Strategy at Chapel Hill Denham. Mr. Ibrahim, let's continue with the conversation. If we take a look, we were talking about the elections earlier. If we take a look at the presidential candidates, they've been speaking at different fora, and the key candidates have really alluded to the fact that there would be a significant overhaul of monetary policy, which will have an impact on inflation if they are elected. What kind of revamp, what kind of overhaul do you think these candidates are talking about? And what kind of overhaul do you think that monetary policy needs that will bring down inflation?
Honestly speaking, in my view, I think, none of the presidential candidates should be talking or speaking to monetary policy, unless if we want to say that the CBN is not independent in terms of taking charge of the CBN and also taking charge of monetary policy. Naturally, across global advanced and emerging markets, you would expect that monetary policy decisions are left with the central banks and for the committee that are in charge. So I struggled, when I heard, the candidates talking about, an overhaul of, monetary policy. Rather, we should be hearing them talking about, the fiscal policy instead.
Yeah.
And my sense is that, monetary policy should be left, to the central bank to take charge and also control. If there are policies that any administration would like the central bank to support, those are entirely different things, as a whole.
Okay, that's actually your view, and I understand where you're coming from, at least professionally. Now, if we take a look at inflation, what do you think will bring down Nigeria's inflation? And when do you think it will come down? What will bring it down and when?
So these two appear like, somewhat difficult questions, but I'm going to give my view because we will need some sort of, low-hanging fruits, to start with, and then we begin to talk about, some sort of medium to long-term, plans that the government can implement. The first to my mind, which I believe, can easily be, addressed is for us to have a much more efficient, foreign, currency market. If we have, a more efficient currency, market, what that immediately will do for us is for us to have, the element of, foreign currency impact on our inflation removed immediately. That is on the one hand. The second thing I think, that we can also do is to improve security. And I think that's also something that is like a low-hanging fruit. We do not need to wait for too long before we fix, security. If we fix security, it will allow the farmers, to go to their farm, without any fears of attack. They will also be able to, to move goods and services to the cities, without any fears of being stopped on the road by, bandits or whatever we call them. So that's another area where I believe if we just tighten security, our food problems, at least for those that, for the food items that we produce locally, we shouldn't have much problem, that are linked to insecurity of farmers. I think if we now take like a medium to long-term look, I can argue comfortably that we need to fix infrastructure. If we fix infrastructure and we ensure sustained security of the infrastructure, then we will be able to bring down inflation, because by then the bulk of the cost of production of goods and services will be sitting locally. They will be sitting in the country, and it is not that we are importing those cost elements. And naturally speaking, the fact that there was a war between Russia and Ukraine could have affected us less if we have if we had had the bulk of our, raw material sourcing, locally. And you cannot source raw materials locally, or you cannot even produce goods and services locally if you do not have the right infrastructure. And this is where I believe if we take a medium to long-term look at it, the government should look to invest in infrastructure. Let us, ensure we add more to the rail system that we have. Let us, more importantly, ensure that they are secure. Let us also ensure that we fix our power problem so that small and medium enterprises can do businesses at a relatively, sort of cheaper rate than they currently do. So we need to fix all those elements, but it will take a long time in my view.
Okay, Tajudeen, we just have about 2 minutes to end this show. And let me talk to you about perhaps how companies and investors are adjusting to this spiraling inflation. We saw at least averagely annual inflation for 2022 at around 18%, vis-a-vis how Nigerians are also coping. According to the World Bank, the 30,000 naira minimum wage has diminished to about 19,355 naira as at 2022. The World Bank also said that if these conditions persist and we do not improve, about 23 million more Nigerians will plunge into poverty by 2030, excluding the fact that 133 million Nigerians are currently living with multidimensional poverty. So how do you juxtapose this in about a minute and a half?
Well, I think the World Bank is just, spot on, and, calling our attention to all those numbers are indications that, we have to do something, very quickly as a country. And that will be coming from, the government. I think, it is one thing for us to, increase, the income of workers in the country. If you increase income or salaries and you do not fix infrastructure, you will still be on the same spot, or you can even probably go back or retard in terms of, growth, in terms of growth and development. So we need to, by the time we fix infrastructure, in my mind, we will create jobs. And by the time we create jobs, we will create, more savings in the economy that, the big economy can tap into when there is need to develop this country further by embarking on big projects that can support our growth and development. We take a look at the pension industry, for instance, with around 14.5 trillion assets under management. That is the largest pool of savings that this country has. We have it just because we have people that are contributing to that, to that pool of funds because they have jobs. So if we fix infrastructure and we ensure that that creates, jobs, then we will have, a lot more to talk about as positive development on the back of, infrastructure development, in my view.
I want to say thank you very much, Tajudeen, for your deep insights. I think I really enjoyed this interview today. We were so deep. Thank you very much for your insights this morning. Why are you smiling? Why are you laughing? In just 10 seconds, what do you have in mind?
I'm smiling because you are spot on always.
Thank you very much for coming. I hope to see you soon. All right, I've been speaking with Tajudeen Ibrahim, who is the Director of Research and Strategy at Chapel Hill Denham. We've been talking about the impact of inflation in Nigeria and in fact, annual inflation for 2022, outlook, so many things that you can take out from this interview today. That's the much you can take on today's edition of the program. Be the best you can be the change that you want to see. I am Nancy Inaji. I will see you all again tomorrow. Bye now.